is the MyStockScanner Live powered by 3-Point Playbook. We are here to save you time, grow your money, and maybe help you sleep easy at night. And don't worry, Liam is not coming to talk you in. Each show, we scan the markets and we test today's stocks with 3 simple questions. Is it a quality stock? Does it have an upside? And is the timing right? And does it work? That's a good question. Well, if you're looking at the 3-Point Playbook portfolio, it's up by 32.45% on the year to date. And the guys in the engine room for that and the show of that Ferrari, that's Liam Flavel and Hans Henrik Nielsen. I am the third wheel and I get to ask questions of those 2 gents and they're ready to answer. On the show today, we will be talking Ferrari, we'll be talking gold and silver, Bang & Olufsen, Taiwan Semiconductor, and in our Friday feature called Face Off, we pit Tryg and ALM Brand against one another in Face Off. So fasten your seatbelts. First up is number of the day. It's a day that's related to a day. It's minus 1.3. You can think about it all you want. We'll give you the answer at the end. And we have a birthday. I'm not going to take up a Danish flag because that would be kind of weird because we are celebrating the bull market. It's turning 3 years old today. And just like any other 3-year-old, they throw their tantrums, they soil their pants, and they throw things around. Guys, is it worth celebrating? And what's the expectations here?
It's a weird bull market, let me just say that. And it's fairly thin in that regard that a lot of the time has become a bit better, but a lot of the time there have been 7, 8, 10 stocks that were running the bull market. So a weird bull market.
And Liam, you will advocate that a bull market runs for 5 years because that's what bull markets do.
It's the average. It doesn't necessarily mean that that's the 5 years. Yeah, we've got 2 years left, and then that's it. The average gain is somewhere around 90-100%, something like that. No, about 170%, isn't it? Sorry, and we're about 90% in at the moment. But the closest crash to where we are now is probably the .com boom and bust. That only went up 100% over a few years. So. Yeah, no one knows what's going to happen, but stage the AI bubble is probably going to burst.
And I can do that because, of course, you guys are the guys with the answers. So I can say sometimes when I look at the market and you guys talk about it, you almost talk about it like it's a person. But we've got to remember that we are the market, all of us. We are the one that control the market or don't control the market. Isn't that so?
Yeah, definitely. The market is a weird beast, to be honest. And when people are asking, are we beating the market? Our question is always, what is the market? Because it's some sort of random mixture of stocks that someone have decided to put together with a random weighting, I would almost say. Yes, it is a weird thing. And you should never get this to be personal. It's not a person. It's not a thing. It's just numbers.
And it's impossible to predict. And definitely. I'm not going to give you a peace prize if you can answer this, because we're going to look into earnings next week, and earnings season starts on Tuesday. We have some of the heavy guys. We got JP Morgan, Johnson & Johnson, Wells Fargo, Goldman Sachs, BlackRock, and so forth. And we get to ASML, Bank of America, Morgan Stanley, and then TSM is coming up on Thursday. And we're going to look at that in a second. Friday, smaller one, but still important one, American Express, Bloomberg, and a lot of others. And we also have some Scandinavian companies. But let's look at TSM in the 3-Point Playbook, and then try to gaze at what are we looking at in earnings.
Just 1 second.
Well, they came out with some numbers yesterday, didn't they? That said their sales are up about 30%, something like that. They've confirmed this year's guidance and probably gone a bit above that. So it was a very, very good, very strong report that we got yesterday. So it was an early report. The actual official announcement of the earnings in the US is next week, but we get a sneak peek with TSM, which is always interesting.
And when you bring it up like Hans Henrik does right now, and I'm glad I'm not colorblind, I just see a lot of green, basically.
The thing here is we should look at that in just a few years. They have basically quadrupled their revenue. Looking at their earnings per share growth, meaning how much is they making altogether. There was a single bad year in 23 where they went a bit down, but they are just growing like crazy. And that is the picture we have from the AI chip craze that is going on right now.
But we're also getting into that territory where, again, now we talked about the market as a 3-year-old for a second ago. And the thing is that TSM, they shouldn't be off a lot when they give numbers until, well, then we're off to the races, basically.
Yeah, it's going to be an interesting one when they do start, announcing. Oh, it's not quite as good. The market, as we've said so many times in this year, the market is priced for perfection, and TSM and video companies like that are at the peak of that as well. So any hint of a downturn, then the TSM could be in trouble. We went into it in our portfolio, the 3-point playbook portfolio, on the 25th of April. And we're currently up 82.5%. So, we're feeling quite smug about it at the moment.
Well, we should say that stocks like Taiwan Semiconductors and Nvidia, they are actually not that expensively priced on their PE ratio. They are something like 32, 34-ish, which is not an insane pricing considering they are in the lead of an entire, bubble or hype or whatever you would call it.
But also, when we look at what comes out next week, now we had some guidance numbers for Jyske Bank today, and they're up by 4%. When I look to the market right now, Danish market is up 0.25 or 2.4. We're looking at a lot of banks, heavy financially thing for next week. Do we expect some sort of similarities? I know that you can't compare Jyske Bank to Wells Fargo or Bank of America for that matter, but still.
Well, the thing with banks and insurance companies is that they are often benefiting from high interest rates. So the fact that interest rates are still fairly high in society will help them. The question is, are they starting to lowering their guidance because they know interest rates will drop a bit, or are they actually starting to mention some of the recession-like reports that is coming from? We know that in United States, out of 50 states, there are 32 right now in recession territory. So it will start to hurt at some point, but maybe not in this earnings report.
And as said, we're calling it earnings season because this sort of sets off sort of I won't say a roller coaster because that indicates that it's going to go up and down, but it might. But it's an avalanche of numbers that we're going to receive over the next coming weeks. This is sort of a solid start. There's not too many from the AI bubble in it. Liam, what numbers are you looking forward to if we look for, into next week and beyond that? Which ones are the key ones for you?
I think the key ones for me, some of the banks coming out. So there was a big sort of macro event that we haven't really talked about too much on the private credit side of things. A big car part producer sort of went under. And basically, I read this morning an interview with one of the bankers over at, I think it was Morgan Stanley, saying 232 billion just disappeared off their books.
Yeah,
and they're still trying to find it.
Yeah, was the name of the company.
Yeah, okay. Yeah, I think they've got a sofa. They're hunting down the back of that, see whether it's down there. But if not, they may be in a little bit of trouble. But the private credit market is an interesting one, and I'd like to hear the bank's view on those.
We get a little light on that next week, and don't worry about it. We will be all over it Monday, Wednesday, and Friday when our shows is rolling at noon those days. And of course, we will be there in articles on MyStockScanner. And well, of course, you will get to see it as a member in the 3-point playbook if any changes is going to happen. And Hans-Henrik, I was looking at gold and silver yesterday, and Royal Gold, which is in the playbook, we're down 6% yesterday, but I can't really see that dive today. What's going on?
Yeah, there was a big thing going on in the metals yesterday. This is our position in Royal Gold. We have that on right now and are nicely in profit. what happened yesterday, and I'm a bit puzzled about it, because what we can see here, if I just remove these colors, is that the price went up 4% in, for instance, silver yesterday. Then it went negative and it went up again. Today, it's basically doing the same, going up, being pressured down. Something is happening in the metals right now. I'm not completely sure what it is. But they could be profit taking. A lot of people are talking about $50 in silver, $4,000 in gold. Is that the ceiling we will hit? It's impossible to say. We are making some good profit both on the metals itself, and we have the Barrick Mining and Royal Gold in the portfolio as well.
Liam, when Hans-Henrik mentioned these equal numbers, those nice round numbers, it almost rings a bell to what Trump says when he says tariffs. They're always round and fine. But if we're talking $50 on the silver and we're talking $4,000 at gold, does that have some sort of feeling to it that people sort of kind of go, no, I'm not going to go higher than that?
Like we were talking about at the beginning, the market is a lot of individual opinions going in there, but a lot of that is psychological opinions as well. So 4,000 is a nice round number that everyone can look at and say, yeah, that's our target. People don't look at it and say, I'm going to go for $4,248.56.
Well, you hit my number now.
Yeah, well, maybe we'll get there, but yeah. So they're psychological numbers, but they're still important. It's a bit like the moving averages you can see on the page there. They're psychological crutches that people use to bounce off of.
And talking about bounce, and since we are talking gold and silver, we're bringing up a stock now that I've been looking forward to because it has a nice sound to it. It's called Race. When you look at the ticker, it's Ferrari. And did they crash yesterday? I think so. What happened to Ferrari? It was definitely not a Formula One race, but it was a race to the wall. 15.5% down on the Italian market.
Yeah, Ferrari, as with all the other car manufacturers, have been aiming for getting a lot of EVs, electrical cars out there. And they disappointed somewhat on that. That is not going quite as well. We were talking about this morning. Are you really going for a Ferrari, just saying zzz, or do you want some more power behind it? I'm not sure. Maybe our next candidate here today can have a bit more, can put some sound into them. But it's just that they dropped on this, and we were actually looking at it and thinking that might be a reason to start looking at a Ferrari at some point as a potential buy. We are not completely there yet. We want to see a bit more drop in it, but as the regular viewers know, then we are looking at our value chart here, and if it drops down in what we call the cheap zone here, it means that there's a lot of upside. What we need to make sure is that the drop yesterday is not because something is structurally changed, because then it can be a bit of a fool's game to enter now.
I just want to stress that when we're talking Ferrari, it's just stock. It's not that we're going to buy a Ferrari, each one of us.
I can't fit another one in my garage, actually.
No, I can't.
Yeah,
that's it.
I have too many red.
But let's talk about something that we received on a question, because you can write the program. You can write us at all times. It's called FOMO@MyStockScanner.com. And we had questions about the value chart, because the thing is that yes, there is an automatic once you log in and take a look at it. But you guys always, when I suggest stocks, ruin them by moving the value chart. So sorry about that. You're not, but
not always. But what we do is that what we're looking for is what have been the markets, the big guys, the big elephants. Where have they in the past thought that a given stock was either cheap, measured in price earning, or expensive? And we can see here that if we just use the default setting for Ferrari, it's a bit off. And we can do that. We drag the channel down so we can hit as many bottoms as possible and say, okay, this is an area where Ferrari normally back in the past have been shooting up from. As well, we can just remove the analyst here. As well, we can do with the top and just drag that down to see how can we hit as many tops as possible. And we can see back here, this is generally an area where the market had thought Ferrari would be expensive. So a good question would be, would we have been in Ferrari before the drop yesterday, and we wouldn't have bought it for a while actually, back in 23 maybe down here, but it has been fairly expensive, and it's not normally a stock we would own.
So far in regards to Ferrari that we are holding off on, we are simply putting the brakes down on that one. And you mentioned something about that you want sound. Let's go to sound then. Let's go to Denmark. Let's take a look at Bang & Olufsen, who yesterday went down by almost 8.5%. They were down 8.39, I think. And it was after that quarterly revenue fall short. Is it a stock that you would ever be in?
Absolutely not. We just have to go down to look at the earnings per share. How much are they making for each stock? And we can see that is negative, 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 negative. Maybe sometimes in 27 they are going to be profitable if we should believe their own guidance, which means our value chart looks like this. This is an absolutely no-go, no-touch, never invest in, as for our 3-point playbook strategy.
Yeah, and exactly. That is, Liam, now it was almost turning into a stereo test with all those negative. but Liam, the rules that you have for investing in stock, that never wavers. And that's part of having a strategy for when you're investing.
It absolutely is. So Hans, if you can just flip to the playbook page very quickly.
Yep.
We basically have 3 questions. One of them is it a quality stock, and the first part of the playbook section there is basically to show you how much is in green, which means it's good quality, how much is in red, which means it's not good quality at all. Under that, we teach people to look at the earnings per share and ask some questions underneath the hood. But the second question then is the value. Is it undervalued? Is it cheap at the moment? And so there's good upside for us. And if we can answer that question, then we look at the technical side of things to say, okay, is it in a good position to buy? And be a no on all 3 questions is a big no.
Let's jump to one of the things that we always have on Fridays, and I know our users and members like it because we do an article about it after. It's called the Friday Face-Off, where we pit 2 stocks against one another. And we might not be able to give you insurance on your investment, but we can give you insurance companies now because Tryg was out with better than expected numbers. And still, when I look to the market right now, they're down 1.5%. But there are other options in the market. ALM Brand is another option, and there's nothing about that we recommend these stocks. We analyze them. That's what we do. But that's the face-off today. What do we see when we look under the hood?
Well, now we won't want to give too much away from the article, but I can tell you that what we do when we do this face-off is that it's mainly question 1 and question 2 we're looking at, meaning is it quality stock, and is a lot of potential in the stock. And if we look at the 2, we can see that they have both some green and some red with both of them. This is Tryg and this is ALM Brand. There's somewhat more red with ALM Brand. But that is what we try to teach people. That is how to weigh these things up against each other. Personally, I'm a big fan of quickly growing earnings per share. That means they can squeeze some more profit out of the revenue they actually have. And if we think both of them are fairly okay, not on the edge of complete collapse, then we go into our value charts and have a look at. This is been some big mountains here earlier on, but then see which one of them are placed in a place where we expect a lot of profit upwards, and we do like them to be fairly low in what we call the value channel here. Then we compare the 2, and I can tell people that I have a bit of a favorite between the 2, but they will have to read the article this afternoon.
And that's talking about being a tease right here. But the thing is that, again, these are not recommendations. This is simple analysis of these stocks, and that's how we go about it.
If I may say, it's actually also education. We want to teach people to find these stocks themselves. They shouldn't be reliant on us to find them.
Yeah, exactly. And the thing is that might be another leg that we are standing on. One thing is the investable moment. The other thing is the teachable moment. Oh no, that was not teachable moment. That's what I meant. But Liam, on Monday we opened the book, so to say. I talked about it in the intro today. 32.45% up on the 3-point playbook. We don't have neither of the stocks that we're talking about in the face-off today.
Yep.
But we're coming up on earnings seasons, and one thing that I know that you always say, we never buy into earnings season.
We don't buy anywhere close to earnings for a particular stock, so we wouldn't buy any of the stocks that are coming in next week. Obviously, we've got TSM already, just because you get enhanced volatility around there. So, like with Tryg today, that they're dropping off. They had decent earnings, as far as I can see. I don't really follow them too much, but investors are using it as an excuse to say, okay, the earnings came out like I thought they would. Time to sell. Time to put my money to use somewhere else. So that's what you see a lot. Even though you get stellar results in, you actually get a drop in the share price for no reason. So we'd rather stay out of that volatility and then justify an entry later on.
That's the Monday thing. That's the 3-point playbook. And I know that we are explaining these things because we are a new show. This is, what is this, our 5th show or something like that. So we're still early goings here. And on Wednesdays, we have the watch list where we're looking sort of into what the searches are from our members. There is an article up on our site where you get to see what Scandinavian things we are looking at. One of the things that we jokingly always bring up is the number of the day. Today, it was minus 1.3%. And I'm going to ask you guys, what is your favorite day to invest? Do you have a favorite day?
The green days.
Yeah. I get it. But is there a day where you kind of feel, oh, it's better today? I'll stay out on Mondays. I'll stay out.
I very rarely invest on Saturdays or Sundays.
Oh, shut up.
That's about it. Yeah.
However, we are always a bit irritated Saturdays and Sunday. We are awaiting Monday, like all other investors, I think.
Yeah, but then on Mondays, people, they don't invest, and they shouldn't. According to numbers, these are the best investment days seen over 23 years, from 2000 to 2023. Mondays came out on average 0.2% down. Tuesdays was a plus of 4%. Wednesdays a plus of 0.8. Thursdays plus 1.8. And Fridays, today's number, minus 1.3. Not a good day to invest, according to.
We should take some days off, it seems.
But no.
Well, I know both of you have done that.
No, you had Monday off. Come on.
Yeah.
But you came back strong with a webinar about nuclear, Hans Henrik. You did that on Wednesday. It's available. You can go and see it. And yesterday you did a stock of the day that is not nuclear, but it was related in that sense, quantum service.
Yes.
Can you give it just a little bit of a peek, and then people can go explore themselves?
Well, what we did with the webinar was that we were looking at both the miners, meaning the ones that were mining uranium, for instance. We were looking at people building the facilities, the nuclear facilities, power plants. But Quanta Services here, PWR on the New York Stock Exchange, they are you could say a servicing company, not only for nucleus, but for gas, electricity, all sorts of stuff. And they are the ones that maintain plants and come and clean up if stuff leaks out, or so they are more the maintenance guy around it. And we often see that we see it with windmills at Vestas. One of their most well earning services is actually the maintenance service around the windmills. So we often see that service companies like these can be fairly well earning. And Quanta here, as we can see, it is high quality. The valuation is a bit neutral, so it's not the exact right time to go in right now, even though it says strong timing, but it is a bit expensive.
Again, articles and in-depths are to be found on our pages, also on Facebook, but mainly on our homepage, MyStockScanner.com. Go there, have the read, see the thing, and maybe re-see the webinar on nuclear that Hans Henrik did. And do you have questions for us? Please don't hold back. FOMO@MyStockScanner.com. MyStockScanner.com. We're always up to receive your questions and try to answer them either on the program or in other forums. And that's it, guys, for today's MyStockScanner Live. Remember, investing doesn't have to be complicated. There's just 3 questions, and you just have to answer them before every decision. Is it a quality? Does it have an upside? Is the timing right? We're going to save you time, make smarter choices, and maybe sleep with ease with MyStockScanner.com. You guys have a great weekend. Remember, Hans Henrik has a weekend wrap sometimes over the weekend, but see you on Monday for sure. Take care, guys.
Absolutely. Bye.